One thing I'm going to tell you about variance analysis is the fact that it has a lot of confusing formulas, which is why a lot of students don't like it. Yeah, a lot of formulas are there. Yeah, but like you probably know my style by now, I don't like formulas. So even if we're going to use the formulas, especially if you're the type that like to memorize, yeah, you can memorize formulas, but I'm going to take this particular topic in a way that you shouldn't have to memorize the formulas. In the last series of lectures, we've looked at how to set budget. We've looked at how to prepare those forecasts, the target, right? Now, where we are getting into now is result analysis. So we're saying that now we have actual. Now we need to assess our actual. So it's more like the proper performance management from the name of the paper. We want to perform appraisal of those managers. And remember, there'll be different types of managers that we have to assess, right? There's a procurement managers who has been buying material for us, right? There will be production manager who has been using the materials that we're buying, right? But remember, the story is that we have planned all these things in our budget. We have planned the quantity of materials that we want to buy. We have planned the price that we're going to pay for those materials. When we are planning the price, that is the work of the procurement guy. But when we are planning how much materials we have to use, that is the work of the production guy. A lot of things will happen, and actual will never be the same as the budget. So anytime we are talking about variance analysis, what we are asking ourselves is, we want to analyze the difference between our plan and actual. Yeah. So this is our focus, the difference between the plan and the actual. Please pay attention very well. I need you to understand this variance topic a lot. But once you have that understanding, you'll be fine, right? And for us to be able to analyze or understand this, we need to calculate it first, which is the first thing we're going to be doing. So the first thing we're going to learn is, how do we even calculate the difference? When we now know the difference, we'll now step it even one step further and say, why do we have this difference? Why do we have the difference? It's important to know why we have the difference, because if we don't know why we have the difference, then we don't know who to blame. Should we actually be blaming the managers for not achieving the budget? Or we should actually be praising the managers while we blame the economy of the country, or while we blame inflation, or while we blame some unexpected circumstance that happened during the year? Or should we be praising the managers truly because they've achieved the budget, or they have actually been lucky? Because a manager could be lucky to achieve the budget without any effort. Whoever is responsible will now influence us on the action that we have to take. Should we fire the guy? Should we promote the guy? Should we train the guy? Should we be blaming procurement manager when we should actually be blaming production manager? So let's start quickly with that. Remember, we said what we're looking at is the difference between the plan and the actual. Yeah. And remember that every time you spend, especially when you have a variable cost. So we're going to start with the cost part. We're going to look at the cost and we're going to look at revenue. But we'll start with the cost because the cost part is quite bulky, and that's the part we'll spend more time on now. So let's look at the variable cost. Remember, a variable cost is a variable cost because it moves with quantity, with activity level. So usually it's always the product of price and quantity. So anytime you spend any money that is variable, the total cost you're spending is a function of price and quantity. Yeah. So which means every time you want to do an analysis of variance, definitely this will always be a major component to look at. So whatever variance we have, we must be able to break it down into price and the quantity. Remember, price is procurement manager. Quantity is production manager. So if I get price variance, I'll be speaking to procurement manager. But if I get a quantity variance, that will be the appraiser of a production manager. So that is one of the reasons why you must be able to separate any variable cost you spend into those two categories. So whether it's material cost, labor cost, or variable overhead, we will follow the same pattern. We might call it different names, but it's still about price times quantity. Remember, take for instance, labor cost. The quantity for labor cost will be what? Any idea? What will be the quantity? For materials, we can easily say yes, is material quantity. But for labor, what will be the quantity for labor cost?
Hours.
Repeat again, Carissa.
So is it hours?
Exactly. That will be number of hours. Yeah. So for labor, quantity will be the number of hours. And the price for labor will be what? The labor rate. Yeah, which is the salary rate we want to pay the guy. So any variable cost will fall in this category, and that is how we're going to analyze it. Yeah. So what I'm going to do is I'm going to do the explanation part first. Then we'll now use that explanation to try and solve a question together. Okay. So stay with me, and I'm going to start with material. So we're already starting. So we want to talk about material variance. Yeah. To material cost. So the way I'm going to take it is we'll talk about the overall, then we'll break it down. Okay. So take for instance, if what exactly are we even saying about variance of material cost in English? That is where I'm going to start it. Every variance we are going to calculate, we're going to understand it in English before we even put it down as a formula, right? So the English part is the part I want you to understand. If there's anything you need to understand in your head, it's just the English part, because that is much easier. Because once you understand that, you can write the formula yourself. So if you're talking about total variance for material cost, so total variance, I'm not splitting it yet. The whole of material cost, let's say we've budgeted something, we budgeted unit, we budgeted everything, then we have actual. What's the total variance for material cost? We'll be asking that, did we incur? Let me use the word incur so that you don't get confused with price. So did we incur more cost on material than we should? That is the question we are asking for total material variance. This statement, does it make sense to everybody? Like, that is our total material variance. So we know what we should have incurred, but the question is, did we incur more than that? And that is the total variance for material cost. Excuse me. So which means that what we are actually talking about is we'll be comparing actual cost of material, which is what we incurred, right, with the plan, which is usually the standard cost of material. Let me check this with you guys quickly before we even go into deep variance analysis. In your MA, do you remember your standard costing? So it's very important to understand the difference between standard and budget in variance analysis. In fact, if you don't have this understanding, forget about variance analysis. It's always going to be in shambles for you. You will never just understand what is going on. Let me quickly break that down before we even go into talking about variance, because we can't progress without it. Let's say you've done a budget, which you said you want to make 100 units of materials. So let's say this is your material budget. 100 units and your price, $5. So which means your budget will be $500, right? However, your actual is now saying that you're actually going to have activity level of 120 units. Yeah, let's even say you buy it at $6. So which means your actual cost is $720, right? Now, this is your budget. This is your actual. Your standard is your flex budget. Please take notes. Remember when we did flex budget? That is your standard. Your standard is your costing at the actual level of activity. So you have budgeted at 100 units, whereas when you revise that budget based on the actual activity, then you have the standard. So which means the standard cost will now be your activity level, actual 120, multiplied by 5. So this is your standard cost of material. So if there's any reason to even think of checking how any manager has done, you cannot use the budget. You have to use the standard, because you have to flex the budget before you do performance management. If you remember flexible budget, yeah, which you have to update when the activity level is changing before you do your comparison. So please note that your standard is your flex budget and it's never your budget. Anytime you hear standard cost, that is your standard costing. Very important. Because without that understanding, you can't, and I'm happy that I picked that up quickly, because everything we'll be doing will just be in dustbin if you don't understand that part. And that is why this plan that we are talking about is always the standard cost and not the budget. Is it making sense? Are we going somewhere? Yeah. If you have any confusion, if I'm using any word that you cannot relate with, please scream and shout. You cannot afford to miss any part of this, right? Because remember, even if I'm going to post the video, a lot of explanations I try to cut off, because I can't put all 2 hours videos together. Yeah. So if you are here, it has to make sense to you. Okay. And maybe you're able to also teach the people that are not here. Okay. So now that you know what standard and budget is all about, let's go back to material that we're talking about. We've said the overall material variance is just answering this question of, do we incur more cost than we should have incurred? And if you think like that, you will see that what we should have incurred is our standard cost. Because if we had produced, in that scenario that I gave you, 120 units, we should be calculating material cost based on 120 units and not 100. And that's why you see that this part that I'm talking about is actually going to be standard. And that's why your overall material variance is just your actual cost of material minus the standard cost of material, which is what you just saw in that scenario that I gave you. So watch me closely as I'm going on. I will hardly make reference to budget cost, because in variance analysis, it's always about standard costing. Budget can be a basis to derive the standard costing, but our comparison would always be on standard cost. The only time we go to budget is when we get to fixed cost variance. And you can relate with fixed cost variance because fixed cost variance is not driven by activity. So budget will come in that space, right? But for all the variable analysis that we're going to be doing, it's all about the standard cost. It's all about the flexible budget, not the budget. Okay. Now we said material cost is not just a mysterious amount. It's a product of quantity and price. Yeah, that is what makes the combination of quantity and price will make your material cost. Agreed, right? So which means we need to know how to calculate our quantity variance, which is called the usage. Your usage variance. And this is your price variance. And how do we calculate those two? What we are saying is that if we are talking about price variance, the question we have to ask is, did we pay more price for the materials we bought? Simple. Did we pay more price for those materials that we bought? That's what I'm going to put down for you. Yeah. And I hope that makes that statement makes sense. That material is just asking that, did we pay? It can be more, it can be less. So let me use the word different. Do we pay a different price? Yeah. Other than planned for the materials we bought. That is the question that price variance wants to answer. And does it not make sense for that to be the price variance? Because price variance is about what we plan to pay in price, yeah, not quantity now. The price we plan to pay and the price we actually paid for those quantity of materials that we bought. So in formula, what we're saying invariably, which is the way I would advise you to write your formulas, not as you see it in your literatures. Yeah, I don't know what you're using, but just know that what you're saying is that you're checking the actual price. Yeah, the actual price minus your standard price. That's the difference between the pricing. Then multiply by the quantity that we bought, and that is actual quantity. But I'm sure if you go to your books, you'll probably see something like AP, AQ minus AQ, SP. Like, how many of these AP, AQ, SQ that you're going to find in all the variants we're going to calculate? You're going to run mad with AP, SQ, SQ, AP, SQ, SQ, SDL. You see a lot. But I don't like this. Understand this English, which is exactly what we're talking about, and you can put it down in formula. Once you can understand that statement. But like I said, don't get it twisted. It's going to feel comfortable. But the way to actually be in charge is to practice questions with that English understanding that you're having and testing it until it sticks to you, right? Because there's a lot you're going to see. Yeah, but all of them, we're going to simplify them like that. But what about quantity? We're talking about quantity. What we're saying is that, did we use more materials than we should have used? That is quantity variance. Usage is about, did we use more? Did we use more material than we should have used? That is the question we want to answer. Does that statement not make sense for usage?
So can it be like, did we use less as well? So more or less?
Yeah, it can be more or less. Yeah. If we're checking whether we use more, we might discover that we actually use less or we use more. So that's why I didn't want to bother changing the words again. Yeah. Just to make you, maybe, that makes, I want to simplify it as much as possible so you can relate with it. Yeah. For us to know whether we are doing well in our usage or not, what we need to check is that did we use more than we should have used? Remember, I am not saying that did we use more than budget. No, you're not hearing budget in my mouth. The question is, did we use more than we should have used? And what we should have used is our standard usage. It's standard consumption, not the budget consumption. So that is why for this one, is about the actual quantity that we used minus the standard quantity we should have used. Then because this is quantity, we need to convert it to amount. We need to multiply by the standard price. See, don't stress yourself. You will always have to multiply by standard price. Anytime you want to close, you already have a bracket and you need to multiply by a price. It's always going to be standard. Know that one for free. So you are never going to be multiplied by actual price. No. Because it's a plan that you are assessing. You are checking your plan. Yeah. To see whether it's the same thing as the actual. So note this. Even when we get to overhead, it's going to be standard rates. It's always standard, standard, and standard. Anytime you have to multiply. Yeah. So do we use more than we should have used? Then you value it at the standard price. At least remember that I warned you that once you close your bracket, you will never have to multiply by actual price. That helps you not to get confused. And I warn you, practice. I need you to practice. If you check your book as well, any textbook, maybe BPP or Kepler, you probably see AQSP minus SQSP. Imagine asking students to memorize all of these things. We have not even started. We're already seeing all forms of QSP, SP, SP, SP. I can't even stand it. So once you understand those two statements, material variance is not more than that. Whatever you get here and here will always add up to whatever you have here. Because it's this variance that you are breaking down into quantity and price variance. Any question? Making sense? Now, let's go to labor. So that's material, and it's not more than that. Let's look at labor variance. For labor, overall is not anything different from what we said for material here, which is, did we incur more cost on labor than we should? Yeah, that is the total labor variance. Yeah, we are saying, did we incur more cost than we should on labor? That is the overall labor variance that we're talking about. Did we incur more cost than we should on labor? However, for us to be able to even understand that more, we should break it down the same way we broke down the material cost. So we're going to break down labor as well into two. Remember, price and quantity. But for labor, we don't call it price. We call it labor rate, right? So this would be rate variance. And you also told me that in terms of labor, quantity will be hours worked, right? Number of hours. Anytime you hear anything about hours, please think of efficiency. Remember, how efficient you are is just about how much time you're able to save as a labor. They say, no, that guy is very efficient. He gets things done quickly. That's what you're saying. So it's about the time. So that's why when you are doing labor variance analysis, it's about efficiency variance and rate variance. Efficiency is the part that is looking at the hours, yeah, which is the quantity we have in material, while rate is the price of labor, price for 1 hour. The only difference is that we have this specialized name for them. But we are not speaking different language. It's the same thing we are saying. And I'm going to do similar explanation, which is trying to say it in English. Did we pay a different rate, other than plan for those hours worked? You can already see that those hours worked definitely will be the actual hours, because that's the number of hours they actually worked. So did we pay them a different rate? Means that we're going to be calculating actual rates minus the standard rate, which is our plan rate, then multiply by the actual hours worked. Because what we want to know is whether for those hours worked, did we pay a different rate? This is what I need you guys to know. We plan the number of hours we want to use, but did we spend a different quantity of hours? Do we spend more hours? So that is what we are answering here. That did we spend exactly the way you said it, as I'm going to put it. Did we spend more hours than we should have? That is it. And obviously, we always do our valuation at standard price. Like I told you already, that is the trick with it. You're always going to be valuing at standard price. So which means, did we spend more hours? Means we're going to get our actual hours minus standard hours. Then we value it at the standard rates. That's it.